depending on which part of the world you're in. Welcome to the TraderMerlin Show. It is your Monday edition. Happy Monday, everybody. I'm hoping that you have the opportunity to capitalize on some of these cryptocurrency plummets. It was funny, last week I had many of you going, why did you sell on Sunday? You know, the market shot up huge after that. And there was a time where I was like, yeah, I mistimed that one, and I am fully back in. I know we got Big Eb was asking about it the other day. I've liquidated a whole bunch of my, pretty much every Ethereum and Litecoin I had, bought back in, and so for those that are wondering, especially Big Eb, I'm fully back in, plus a bunch more at this point. So anyway, happy Monday, everybody. Hello, Thomasina, Les Gold, Dana, Alex, Mukas. No game today? Hope you're doing well out there. Randall, Jerry, and Mario as well. It's, not the nicest weather out here in California today, but hey, you know what? We'll take a little bit of rain. Allowed me to pull weeds all weekend. Luckily, I clipped the nails, or you would have seen just nothing but dirt under those nails. So hope you guys had a great weekend as well. Sue in Boston, and Terry, good to have you with us. All right, so I did this show last year, and I'll probably do it every year because it's always going to change except for the underlying statistics about market behavior and patterns that occur in the marketplace. Now, if you didn't get a chance, you go out to my Twitter feed, which is at TraderMerlin. You can check out the tweet I just reposted. I believe it's called Almanac Trader. He's doing a free presentation. That's Jeffrey Hirsch will be doing that one, and he is the one who's responsible for the Trader's Almanac. Was actually his dad's company. He took over and just produces some great stuff with amazing statistics. I think it's a great book for anybody to have that's involved in financial markets. So a lot of the stuff I'm pulling from the stat-wise is from that book, albeit I have an older version, but I think it still reigns true. So the topic du jour is going to be this one: sell in May and go away. Now, I got the 17th highlighted because that's where we're at today, but it adds the question of, well, when should we be getting out of positions or not getting out of positions? So I was like, all right, let's see how that all works out. So bottom line is, sell in May and go away. It's a mantra that's there for a reason. Now, the studies that have been done by Jeffrey Hirsch and the Trader's Almanac, which, again, I have an older version, but I highly recommend if you have anybody who's into the trading world, get one of these. I think it's going to be, it's just a great book for you to look at market stats. They have, going all the way back in the 1950s, run stats that show that the best 6-month run in the market, so if you just had to pick 6 months to be invested in the equity markets and then 6 months to be out, the best 6 months to be involved were from November 1st, so basically by November 1st, and exit your positions April 30th, which means you've got this, that's the best 6 months, which means the worst is going to be May 1st all the way to October 31st. Now, that begs the question: does it mean we sell everything May 1st and just sit back and do nothing? Do we short the markets? Well, that depends on your risk aptitude, but statistics show that the markets perform better for that 1 6-month window of time, and then usually in May is when things start to slow down. Not necessarily that they're totally negative, but that things really start to slow down. Now, what's also interesting with this is they couple it with a MACD, which is a moving average convergence divergence. It's a simple technical indicator, but using that in conjunction with the best 6-month, worst 6-month strategy, it tripled the results, which I think is critical for all of us because, it's not just I sell everything on May 1st. Maybe I'm waiting for the signs to sell. So how might that work? And then we can go through the discussion. Of course, I'm going to get a lot of your feedback on it as well as to what you think about May. And put aside your bullish and biased opinions right now. Let's just run through some facts and data and figures and see if we can formulate a hypothesis about what we should be doing. All right, so let's go to our charts. Oh, yes, I did have a question on Philip Morris as well. We'll get to that one. I got Philip Morris. I had Gamestop questions, all kinds of good stuff coming in today. So here is, let's just bring up SPY. I think that's easier to work with. I'll zoom out, and yes, there's a lot of markings on this one, but here is your chart of the S&P 500. It's been nothing but straight up really since last May. I mean, it really hasn't looked weak at all. So the question we have to ask ourselves is, well, when should we have gotten out, right? We could all look in hindsight and say, wow, I would have gotten out right here on the 10th of May and at the dead high. No, you wouldn't have. However, if you go by what the book was talking about, which is let's use a moving average convergence divergence, which is MACD. And if anybody in the crowd doesn't understand what MACD is or how it's constructed, just explain MACD in the chat, and I will go through and explain what this is. Because for a lot of people, it looks like squiggly lines, but I'm assuming some of you know it, probably not all. So your MACD is basically telling you the strength of trend and how, not necessarily overbought, oversold, but some people do use it as an overbought, oversold indicator. this is the MACD. I'll look at the Philip Morris, and I'll tell you why I walked away from Philip Morris today. I was going to, and I had it all lined up, and I decided not to pull the trigger on Philip Morris from a short perspective, and I'll explain why in just a minute. Let me get through this MACD part. So when you're looking at this chart here, there's a lot of noise going on with the MACD, and really what's the most important thing is price action here. So the only way that I would be looking at this from the same perspective that Stock Trader's Almanac looked at it is, okay, I'm in a great bullish position. Now I am getting near May, and we'll put a vertical line here on May just so you kind of use that as your reference point. This vertical line is May 1st, okay? So we could scroll back here and do this. Now, of course, I should have done this May 1st, but I have so many other topics. This is what it looked like on May 1st. Now you notice something interesting. The price chart doesn't tell you much. The only thing that the top piece, the price chart, is telling you is that it started to look a little bit weaker, maybe traversing sideways with a lot of little spinning top dojis, which means indecision. I mean, the market really didn't know which way it was going to go. So that was not necessarily a negative sign, but it certainly wasn't that positive. But you look at the MACD. What the MACD told you here is all of a sudden it's saying that it's starting to lose its strength, and this might be a time to get out. A couple of reasons why. Number one is you have this MACD line, which is the blue line, crossing below this black line. That's the signal line. And it's way above zero. So it was in a strong uptrend. Now you have it selling off. So it basically is telling you that it's probably due for a pullback here. So that may be that time, an opportunity around May 1st, actually a couple of days before May 1st, where you would have been a higher probability of being right by liquidating your positions and just going into cash. Now, of course, we can see what's happened in hindsight. It's been whipping all over the place. But bottom line is that MACD helping determine the turning point here for the sell in May strategy. Now, right now, as you can see, that signal line is well above the MACD line. So as long as that happens, this thing's going to be in a downtrend. And we'll see when this decides to turn. But the theory is, the general theory with this MACD strategy and the sell and may go away philosophy is that when this starts to cross back up, preferably in October sometime, then you would be looking to buy back into your position. Now, the question I have for everybody out there is, what's your risk tolerance? Because I am one that I'm okay to be going short. As you saw last year, I built a substantial short position in the S&P based off of this as well. Let's see if I can scroll back for you and show what it looked like last year. Unfortunately, we were in a little bit different market dynamic with lots of volatility. Let's go all the way back. Do I even get it? There we go. I think that this is June, November. Yeah, here's 2020. So let's go to right to May 1st. So you notice that we had a similar situation in May where the market started to slow down, looked like it was going to start to go sideways. It actually crossed right here, and you can see it actually just touched. But right as it crossed is when I loaded the boat short, or started loading the boat short. And unfortunately, that was right here, right around the 13th of May, and that was intended to be a play until July or maybe August. And as you can see, I was very wrong. It just did nothing but go up ever since then. So that ended up being a decent loss for me in that portfolio. Now, that was defined risk going on, but it was also using this strategy, which usually works where you have the 6 month of poor market performance from the 1st of May all the way to October 31st. And unfortunately this year, it just did not come to fruition. Is it more like hedge in May to the Hamptons we go? Yes, Batista, it is. I think, here's the thing. When we say that sell in May and go away, it doesn't mean that that period of 6 months is negative, although there was a period of times, obviously, where it is negative. It's just they're nowhere near as robust of a rate of return as you would get going from November 1st until April 30th. Now, what that generally means is put it into something else that's going to get you a better yield. So does that mean taking your capital and buying some bonds with it, or something that's going to pay some high dividends or get you a better yield, some treasuries, whatever, to beat a 1% rate of return? That's generally the theory. So yes, I do think it is a bit of a hedging as well, and just knowing that I'm not going to get that same amount of market return. So that's it. And as Lisa says, didn't the pandemic change things as well? Yes, that was a wild card that nobody knew what the outcome was going to be or how that was going to finally end up. In my mind, I actually saw things taking a double dip, which is one of the main reasons why I had built up that big position. Let me see if I can zoom out here. Because we had that first aggressive knee-jerk reaction. And in my experience, what happens when you get these real aggressive knee-jerk reactions, it bounces, and then all of a sudden it starts to test out that low again. And that's really what that whole bet was predicated on, was that we're going to go back and test those lows, at 2,200. I think I bought the 180 puts. I forgot what strike price I bought, but I had, ended up with 420 puts at one point. That was a pretty substantial position. Unfortunately, it took almost a total loss. I got out with some money on it based off my timeline, but bottom line was that was a sell in May and go away type of trade. Now we fast forward to where we are today. Does this mean, hey, everybody dump your positions? Well, I don't know. Let's all come up with arguments for. I'll let you guys come up with some arguments as well. So type them into chat. What you think are reasons why this market's going to not sell off in May, June, July. Why you think it's going to keep on rallying. And go ahead and type a few of those in. I'll give you guys a couple seconds because I have a couple things here that have been looking pretty good from the economic front. And that's the first place I'm going to look here. Certainly the sell in May, go away looks visually like a technical strategy, but to me it has a lot to do with the fundamentals. Now, earlier in the very beginning of the show, Les was talking about, he says, would you use seasonality charts to help answer today's question? I don't look at seasonality on indexes, and I'm not a huge commodities trader, so I don't really look at seasonal charts. I apologize for that one, but you can look at sector rotation models, but right now I still think that those are out of whack, right? So let's see, what do you guys got here? The Fed slowly buying the 30-year, right? So that's one piece, right, is the Fed. And we know that is, not only is it one piece, it's probably the biggest piece, as Medic says, the Fed as well. This means the Fed is going to do whatever they can to keep this economy rocking on all cylinders because they can't afford to have the colossal crash if everything implodes all at once. So it's a challenging time, but we know that the Fed has the markets back. So does the Treasury Department, right? The Treasury is going to do whatever they can as well to help prop this market up because you heard Janet Yellen, oh, no inflation, and Powell, oh, no inflation. Yeah, I'm pretty sure we're going to see more inflation. So it's a little bit of a lifeline that the Fed's throwing out there. Les Gold says markets are designed to go up. Well, that is definitely true, and we've seen that happen here recently where they remove bad performing stocks and they put in new popular growth stocks that they think might be starlets for that portfolio. That said, guys, remember what the most recent addition was to the S&P 500? T to the S to the L to the A. You got Tesla, and look, Tesla, ever since it's been added, has done really poorly. And I think that this is part of the reason why you're seeing the markets languish and not do so well right now is Tesla. And honestly, Tesla's at a moment right now, it's at a precarious level. You see this line I'm going to draw on your screen right here, right around 560. We bounced off that in March. We've double tapped it again over this last week. Last time it was there was December of 2020, and that was, as this thing was being added to the S&P. So it actually does look to me like it has some room to go down. I think Tesla has got some tremendous obstacles, not only that with regards to competition, but I also see them having a lot of potential regulatory stuff come in. Elon Musk has just been losing his mind on social media, pumping and dumping cryptocurrencies and things like that. So, this may reflect negatively on Tesla, as you can see here over the past couple of months, but really it's about that 560 line in the sand. And if that breaks, that's going to bring the NASDAQ down with it. That's going to bring the S&P down. And that, to me, would be a negative piece on this market right now. I think Tesla is not broken. It's just damaged goods right now, and it'll probably go back down, maybe even close this gap that goes all the way back down to 406, which I know for some people would seem crazy. But let me turn this to weekly. Going back to 400, does it look out of range now? No. It actually looks like where it should be, somewhere right around 400, because it just went parabolic off all the crazy pumps. So, what else do we have? Earnings have been solid for most reporting. Yeah, that's true. And again, Nick, it's a great point. But what I personally think is happening, and I say this every time, is they've dropped that bar so low because of the pandemic, because of COVID. They said, oh, well, our earnings were $2 a share. We're only going to make 25 cents per share. And you drop that bar so low that all of a sudden you come out with 50 cents earnings, and you're like, yeah, we doubled earnings. It's like, well, we were at $2. So we're actually doing very poorly, but we're better than the expectation we set. So it's this little illusion that the markets play. Yes, a lot of companies are reporting great earnings, but if you look back historically, it's the bar has been lowered significantly. But it still does create that psychological pump that a lot of the markets are looking for. Herbert says stimulus. I agree. That's irrefutable that we're going to get more stimulus. You hear Biden and the Democrats talking about it. Of course, the Republicans are going to try to shoot that down. But we'll go from $6 trillion and we'll get, $4 trillion worth of more stimulus? that certainly would be a nice shot in the arm for the economy, not so good for future generations necessarily, and for the US dollar. What else do I got? All big techs are doing amazing. Well, I don't know if I would say all big techs are doing amazing. I mean, we can run through some of the big tech firms out there. Let's go look. I mean, if you're looking at Google, those types of companies, yeah, they're still performing great. Here's your weekly. Amazon. There's Amazon. I would not call this great. Amazon, to me, is not looking that good at all, honestly. It's just traversing. It's been sideways for 5-6 months. Even though I love Amazon to death, and I'll never short Amazon ever, it just doesn't look that great right now. Now, Facebook's similar. It was throwing a lot of sideways consolidation, now ripping up to 315, so that's looking pretty good. Netflix, sideways chop. Not a lot here. Apple. It's still moving up, but the trajectory, the speed at which has changed, and now it's no longer making higher highs. So I disagree on that one, Ravi, but that's fine. It's just a difference of opinions. I don't think that all tech is doing amazing. It certainly has been doing amazing, but I think that ship is slowly starting to turn here. But we'll have to wait and see if these things start making some new lows. Let's see. Harrison says Fed increasing bond purchases. Absolutely. And again, they're going to start purchasing more of the long end of the yield curve, the 30s and the 10s, to help bring that yield down. But I was just going to transition to another topic, but I gotta hold off on that one. Elon hasn't lost his mind. Idiots who sell Bitcoin at lower are losing their minds. I don't know, man. If you see some of the stuff that Elon's saying, I think he's lost his mind. He's just kind of crazy. What else do I got here? The Fed going to pump Chuck E. Cheese tokens in the economy. Yes, bring on their Chuck E. Cheese tank. That's right. You're going to get that Fed coin soon. Guys, brace for that one. I'm looking forward to the show when we actually do a show on how to use the Fed coin wallet. I mean, I know it's going to happen. It's going to happen in a few years. I guess right now China with their digital yuan is an experiment that's not going so well. But at some point, it's inevitable we will be on a digital currency here in the U.S. Let's see. Lisa says, I think there are so many newbie traders and they have changed a few things as to what's happening with the markets. Sure, but remember, Lisa, the same thing. I would make the same argument for what happened back in the late 90s when I got started. So many new people came in. It changed the dynamics for a little bit, but again, it's this reversion to the mean of how markets always perform. Why? Because we're human beings. We all have the same predictable reaction. You take one of these wide-eyed newbie Reddit traders or some guy who bought Dogecoin and made a ton of money, they're now addicted to trading and investing. So what are they going to do? They're going to go out and take wild, crazy bets. They're not going to use stop losses. They're going to buy crap. They have no idea what they're doing. They're going to buy someone's pump and dump scam, and they're going to lose everything. That's the nature of trading and investing, which is why I'm such a stickler for trading plans and rules and making sure that you don't do this stupid crap. Even though it's exciting to buy Dogecoin at a penny and sell it out at 60, would you call yourself a good trader there? No, you just got lucky, got blind luck. Our goal is to be good traders and to know when to walk away from an investment, when to put the stop losses on and say, I'll move on to another trade. Jim says stimulus spending. Yeah, stimulus spending for sure. I didn't see the pop as much as some of the previous ones. I'm hoping that the Americans did the right thing, which is take that money and pay down debt. But certainly you have so much more money coming into the economy and spending. I think one of the other arguments here is actually let me not say this one. I want to see if you guys get to it. Fly a lot slower. Pent up demand plus gazillions of newbies. Okay, so I think this is where I was going to go with that. Pent up demand meaning we've had so many people that have been in full-on financial lockdown mode, shelter in place, I'm staying at home, and now all of a sudden those doors are open. We're all going, hey, I'm going to go out to baseball games. I'm going to go to restaurants and maybe go to some movies now. We're starting to spend a lot more, and that catalyst, I think, could probably be one of the biggest fuelers of a continued market rally. All right, let's see what else we got. When Tesla goes to 420, I'll be interested. It could go there. It could go there. I love it, Tang. My golden retriever is an altcoin expert. God, it's so funny how these altcoins are literally all jokes. So DJ says, all that sounds negative? I think a lot of that sounds... We haven't even gotten to the negative stuff yet, DJ. We will get to the negative stuff here. Michael, Big Short Burry. Yep. Shorting puts on Tesla, 800,000 shares plus 40% of his portfolio. Arguably best trader, Mr. Bunny. I don't know if he's arguably the best trader. He's definitely got some clout, and he's hit it well. If we look at Tesla right now... I think that the arguments for short are probably a lot better than the arguments for going long. If I had to, I would probably look at shorting Tesla. I may as well, but I'll let you know if I do decide to go short on Tesla and buy some puts. What else do I got? Anil says, bought Bitcoin at 57,000, not sure to continue or to sell. I have Bitcoin as well, and I have not sold. I'm not selling my Bitcoin. I will keep my Bitcoin long haul. It's just pure numbers, supply and demand. If you look at demand increasing in the cryptocurrency space, right now it's altcoin crazy. What'll happen is it'll shift back to Bitcoin crazy, and then it'll go back to altcoin crazy, and then back to Bitcoin. But ultimately, when you have 21 million supply overall, unlike this stupid dumbass Shiba coin that has 1 quadrillion, 21 million Bitcoins, 1 quadrillion Shiba coin. And people are like, Shiba's going to $1. It's like, you're the donkey of the day. You're the donkey of the day. Medics is only fans. Should I do a fans only site? Mario says, can Elon's tweet get him in hot water as it is clear he is pumping and dumping? It can. There has to be record of transactions that he's doing, timing it with this. And I'm sure there's probably... he can't be that dumb. He's got to know that he is under the microscope with the SEC and regulators. So as brilliant as he is, I can't believe he would be that dumb to be like, dump everything and then issue a tweet the next day. It would be really stupid on his part. So I doubt he'll get caught with anything, but he could definitely get in trouble depending on what they... what evidence they have against him. Okay, so here's some of the other arguments I'm going to give you guys for a bull market. Number one is going to be the manufacturing data. Almost all the manufacturing numbers from the Philly Fed Manufacturing Index, Empire State Manufacturing Index, all those numbers are doing rather well, meaning that the economy is back to its old manufacturing levels pre-COVID. If you go back to 2019, 2018, we're right about those same levels as we speak today. That's a good sign, especially since we're just starting to come out of the pandemic. And please make note here, I'm not trying to make an argument that this market's going to rally or an argument that this market's going to tank. I'm just presenting facts and statistics, and then after we do both sides, then we can formulate an opinion and look at the sell in May and go away type of equation. The other piece that has been it's good, has been the unemployment claims. Not the unemployment rate, but the unemployment claims. Now, those numbers have been dropping significantly. However, right now we're still at 447,000 initial jobless claims. The average pre-COVID was 200. So we're still well over double on the unemployment claims. So while it's positive that the initial unemployment claims are dropping, they're still much higher than they historically have been. So to me, that still shows there's room for the economy to grow, or personally, I think they should cut off the extra value-added bonus payments that they're making to unemployment, get rid of all that, and force people to get back to work and take a job because there's plenty of jobs available. All right, what else do we have? Retail sales has been an interesting one. We've seen some real big spikes in retail sales, but let's be honest, those retail sales numbers have been really volatile. And I think what we're getting is that kind of pebble in the river effect from COVID, right? Which is the initial splash. You had huge spikes in unemployment, then it came ripping back down. Same thing with GDP, same thing with retail sales. So these real volatile measurements of economic growth, to me, aren't the best indicator of where we're at, right? And that's going to be GDP, that's going to be retail sales, and unemployment claims. Now remember, unemployment claims were very high, right? I forgot what the peak was, but we were definitely into the double digits on unemployment claims. We've dropped significantly, and right now we're at 6.1% unemployment. And while that may not seem high, it's still high to what we were pre-COVID. If you go back to January of 2020, December of 2020, you go to January of 2021, December of 2020, we were at 3.5%. I mean, to me, we still have a long way to go, but it's getting better. It's signs that the economy is improving. So I think these are all reasons that look bullish for the market. Okay, let's flip. I don't want to just show the good side. Now I'll let you guys tell me, what do you think are pieces that you just look at and you go, oh man, this is bad for the market. This does not look good at all. There's got to be some stuff out there that you look at it from both sides, right? Good and bad. So what is the bad stuff? Type in the chat. I'll give you guys a couple seconds there as I go through some questions. You're good, Jerry. Late, and I'll get to silver in a little bit. What else do I have here? Chip shortages drive up cost. Yes. And to me, that brings up probably the biggest challenge for our markets going forward. And let's see I'm going to see if you guys can nail it here. But Medic Man says the U.S. needs to have a hometown chip maker. They do. Good luck with that one. I think the chip factor is going to be an issue for us going forward. That's for sure. And the question is that bad for an economy or is it good for the economy? I would certainly argue that it's probably on the bad side of things, not just because it's a chip shortage, but because of the real big reliance on Asia for a lot of this stuff. So that China in particular, that it makes it a little bit dangerous to me. So what do we got here? I see some good comments coming through. Mike LaRusso says, too much optimism. I would agree with that. Remember, back in 2000 is the best example I remember of this. I had a copy of the magazine at one point, it's just not within reach, and it was Money Magazine, and it was like March 1st, 2021, or March 1st, year 2000. And it said, market, it just said boom with big dollar type font. Big boom. And it said, if you're not in, you're missing the boat. And the optimism was off the charts at that point. And ultimately, when everybody's looking one way, that's usually when things rip the opposite direction. And right now, I'm feeling like more people are positioning themselves bullish because of the talk track that's been perpetuated by the major talking heads that this is going to be the next roaring 20s because of all these different factors. So, as we become more and more bullish, I think it's critical for all of you that you don't have to be bearish. You just have to go, the more people that are bullish, the more likely things are going to turn. My old mentor said this. He goes, the market has a way of making everybody look one way. And when everybody's looking that direction, that's when it rips the opposite way. And to me, it's critical that we think that way. So as you start seeing headlines that say, the biggest bull market's in front of us, here we go. Maybe just start selling some puts as protection or buying some puts as protection because it should be pretty cheap if market's at all-time highs. Maybe allocate yourself a little more defensively or lighten the load a little bit, but you got to be careful out there because when everyone's looking one way, too much optimism, that's usually when it rips the opposite direction. And same thing with fear. When everyone's freaking out, that's usually when it bounces like we saw back in early this year in March. What else do I see here? Current inflation number. Nick, this is the big one for me, is the inflation numbers. When you look at CPI numbers and PPI, they've all spiked really quickly over the past few months. And I think that that's going to be a piece that carries the nervousness forward. Now, if we look at some charts here, I wanted to show you this one because I actually knew some guys who were short lumber, which is a ballsy move. I'll tell you, shorting lumber is ballsy, but they're being rewarded. Look at the number of lock limits down. On lumber. I mean, you lock limited on 1, 2, 3 days in a row. We've lock limited down on lumber, and it's almost in a free fall right now. Now, that may not seem like a big deal, but it's down a huge. It's $400, and this looks like a Bitcoin price chart. Let me just go to the peak here, just to give you an idea. 22% slide in 7 days, 8 days for lumber. Much deserved. It needs to come back, right? You got to get this thing to drop a little bit here, but this is still, even if it at current levels, that's inflation, buddy. It's clear as day. Right? There's no argument that you're getting inflation. And here's corn. Corn also had a pretty big pullback, but still the prices are very high. So inflation is going to be, I think, one of the biggest ones going forward for the U.S. market. That could be the challenge because remember, if we do get inflationary pressure, it's a simple knee-jerk response. The Fed will raise rates. And right now, if the Fed starts to raise rates, what's that going to do to this party that everybody's talking about, this robust roaring 20s? Raising rates is going to choke that off. So to me, that you've got this weird little balance act right now where you could make the argument, I could make the argument for an incredibly bullish market, and I could make the argument for an pucker up kind of moment where this market could really have some sell-off if the Fed reacts aggressively to inflation numbers, which I don't think they're going to do. I don't think they can. So yeah, the CPI number is big for me. Rates too low, way too low. Well, that would be an argument to the upside, right, Randall? Right? That's basically the gas pedal being floored, and the Fed's done that since 2009. We've been on just basically full-on acceleration modes in 2009. Slight pause in 2015 as they were unwinding their balance sheet, but now we're right back into it with aggressive spending. So, yeah, to me that's crazy. Roving says all recent IPOs are being IPO or below IPO price. Optimism. Well, remember, IPOs typically do that. They're pumped up, right? So they're not worth what they usually IPO at. They're pumped up. It's a hype thing. You gotta buy it, and they'll do all the biggest public advertising and hype campaigns they can do to get everyone talking about that stock, like Coinbase. And I think a couple days before it was supposed to IPO, it was like $100, and then it was supposed to be $200, and then it was $250. You don't just jump like that for no reason. It was hyped to death. And then all of a sudden, those who could unwind their positions did. And because it was a direct listing on Coinbase, they could sell right away. And that's been very evident in what's going on with their share price. So, IPOs generally do that. They usually gap up way higher than they should, and they'll sell off for the first 30 or 90 days, which is why I'm like, stay out for 90 days. Just leave them alone. All right. Greg Wright says, I want gas to be $8 a gallon only because I'm using a bicycle to get to work. Hey, you know what? If gasoline... Here's an interesting one, right? If gasoline got to $8 a gallon, hell, make it $20 a gallon, right? Does that all of a sudden mean that we're going to start to have a healthier America? It's like diabetes cases are dropping because people are walking and riding their bikes. Let's bring it on. Give me $50 a barrel. I got an electric bicycle anyway. Sorry, I'm being overly sarcastic. Randall says stimulus and property values. Great one. Okay, this is a really critical one because it is such a huge driver of economic growth. Real estate. I don't care where you live. I'm pretty sure every single one of you is just looking at your home values if you're an owner and going, wow. I mean, I'm over 100% in a few years. Amazing, especially you live in Big Bear where I'm trying to buy a place. That is just crazy. Now, what does this do to an economy? It puts it in a very dangerous position because what happens is people start to leverage against the house they just bought or the equity that's in that house they just bought, and all of a sudden you get that same scenario that happened back in 2008, where someone buys a home for $100,000. Within a few years, or even months, the way things have been going, it's now doubled. They'll refinance that, take that money out, and then buy something else and leverage and leverage and leverage and leverage and leverage. However, if rates rise quickly, all of a sudden that puts them in a challenging spot. And it could pinch the housing market. So I don't know necessarily if the housing market's at a top. I think until rates really start to rise significantly for the 10-year, which would obviously directly impact the 30-year fixed mortgage, I still think housing market's going to do real well. I think you're going to continue to see it move unless we start to see that 10-year spike up. And we have seen it move up, but it's still, historically, you're 3% for a 30-year fixed rate, 3.5 now? That's still pretty cheap. But I think down the road, you're right, Randall, property values are great because people can borrow against that and they spend more. Unfortunately, that usually ends up as a recipe for disaster for people who are over-leveraged at that moment in time when the house of cards crashes. Harrison, we talked about early rate tightening, right? And we're going to we'll see probably in the next 6 months or so, by the end of the year, if inflation does continue to tick up, as it looks like it is, they're going to have to start tightening the rates just a little bit here, and that will make for a very interesting end of the year. All right, what else do I got? Medic says missiles flying. Yeah, unfortunately, that's happening, and it could get much worse over there. Sadly, and from my experience and the years I've been doing this, you would think that those types of things are bad for markets. They're actually good. I know it's horrible to say that the loss of life and death is good for markets, but it's true. If you look at the Gulf War, if you look at Afghanistan, if you look at any real conflict, even 9/11, when there was the initial attacks, markets tanked, right? There was a big drop for a day or two, maybe a few days, and then it just rips out from there. So actually, war is good for markets. I don't want to see war, but it is a fact. You can look at it. Let's see. What else do I got? Uh-oh. You got a lot of political stuff going on. 20 minutes down, they'll be drilling for oil on the White House line. Yes, they will be. Let's see. Satu guys, I worked in Florida. Let's see. Got caught up flipping it. Yeah. And it's not... The tough part, so Believable Direction says, saw 2 guys I worked with in Florida get caught up flipping around 2008. It happened to a lot of people, and what happens is this kind of ladder loan type thing that people were doing, and I know people who are real estate agents who've been in real estate many, many years that they got caught up into it. It's kind of like my analysis. Someone asked me yesterday, it's like, well, when are you getting out of your Bitcoin? I said, well, I'm not getting out of Bitcoin. That's one I'm going to keep forever regardless of what happens. But if we look at what happened with Ethereum, and I'll show you what happened with Ethereum. Here's ETH, right? And this is a daily. I sold out right here at $39.45, right? And that was before this thing really started to tank. Actually, before it had this big rally. So I'll zoom out a little bit so you guys can see. And this I hopefully will explain the real estate question that's going to come of this. So right about here is when I sold out of my Ethereum altogether. Dumped it all, right? At $39.45. So it was actually the next day. Let me get that day in there. There you go. On that day. Right, so it looks like I timed it right. I was fine with it because it went from 2,200 to 4,000 in 2 weeks. To me, that was just a little too much. So when something goes parabolic and it goes straight up, and I have such great returns, I'm happy to jump ship. Unfortunately, with real estate, you can't do that, right? You have to wait a little bit with real estate to get the process, and it's expensive to do it. So I generally not doing it with my personal homes, but with equities and stocks and futures and things like that, I can. So I dumped it all at 39.45, and then you look what happened the next day. I mean, this thing shot all the way up to a high of 4,384. Talk about being pissed off. I was really, really upset, but whatever. I had amazing gains. Well, today, or the last few days, it's been one of those things where I was like, yes, nailed it. So my average, I bought half of my Ethereum back at 33.50 and the other back at 34.10. So let me just, oh, come on, Merlin. And I just want to put this on here just so you kind of get an idea of what I was, my intent was. There's a horizontal line. And there's your 33.50. Could I have bought it lower? Yeah, I could have. I didn't. But I still saved $600 per Ethereum that I had in my portfolio. And could Ethereum go a lot lower? I know a lot of people think it can. A lot of people think it's going to go back to 2,000. It might. I'm okay with that. But just so everybody knows, and I don't see Big Eben here today, but I am fully back in. I bought all my Ethereum back at that 33.50 mark and 34.10 respectfully. Same thing with Litecoin as well. Was out at 345 and covered at 280. So to me, I look at the markets the same way. Any market. If something moves up too fast, too quick, get out. You can always buy back at a cheaper price. And I think housing market would be an interesting one for that as well, if we could get the liquidity in our homes. Things look like the Carter days, inflation, Iran trouble, shaky unemployment, higher taxes. I have not, actually, Tom. That was kind of before my time when I really wasn't into markets or politics or anything like that. So I haven't looked at those kind of historical comparisons. Somebody who does would be John O'Donnell. I mean, he loves those types of comparisons. So I may have to check that one out to see, what I think the dynamics are obviously very different now than under Carter. We have so much technology that we didn't have back then. But still, when you have that list of factors facing a market, how does it deal with it? Maybe we can learn something from the past. I don't know. So I'd have to let somebody else answer that question. It's out of my area of expertise, but thank you. Let's see. Merlin, can you talk about leverage in the crypto market? Is there a tool to measure leverage in crypto? Unfortunately, there are sites that will give you different leverage, like BitMEX, of course, says US. You can't get that. You have to use a VPN to get in there. And some sites will give you leverage, others will not. And I don't know if there's a way to test the overall leverage. Remember, because it's decentralized, it's very much like the spot Forex market. You don't really know all the data, right? You don't really know all of the volume that goes on in spot Forex because there's all these little exchanges around that might not be reporting to some central entity. So I think the same thing is with crypto space. We don't know the exact volumes of transactions. We don't know the exact liquidity. They're trying to be centralized in the sense of reporting to different people and being transparent about what the volume is at Coinbase versus Binance versus Bitfinex, etc. But no, I don't know about the leverage, the overall leverage of the industry. Just curious, why do you believe in crypto not going against you? Just wondering. I believe it'll go against me. There's nothing against. I think it's going to move up. It's going to move down. I definitely believe in the long view, the long-term perspective of cryptos, but I review it pretty much just like every asset class. I need to be vigilant about my stop losses. The only one that I just don't care about what happens to is Bitcoin because I'm in that one for the long haul. That's a 5-year play for me, so I could care less about what happens today, tomorrow, next month. Big deal. What Elon Musk says about its energy consumption, I think Bitcoin will be one of the shining stars in the industry. Yes, Harrison, absolutely. It is an absolute wild card. I know some sites are allowing significant leverage, and when you look at, it's interesting that you brought that leverage piece up. I think I covered this the other day did I? You guys have to let me know. Sometimes I forget what I talked about, but I don't think it was with you. I think it was explaining to somebody else. There was a Believable Direction says, hello, GameStop. Yes. Here's an interesting one. When we look at what the U.S. banking system does, it's called fractional reserve banking. And let's just say that the minimum deposit or the reserve requirement is 10%. So if Harrison comes to the bank and deposits $10,000, the bank keeps $1,000 on hand and loans $9,000 out. And let's say they loan that $9,000 out to Tom, who's in here today. Tom takes that $9,000 that he's borrowed, deposits in the bank. That bank now lends out $8,100. and keeping 900 of Tom's, 10% of that 9,000, and so on and so on and so on. So very quickly, off this $10,000 initial deposit made by Harrison, the bank is charging interest on loans at, let's say, 5%, but it's not on $9,000. It's on like $100,000 because of fractional reserve banking. So basically, you've put up your capital and the bank is leveraging it to the hilt per legal requirements, not getting too crazy, but still lending out and making a ton of money. Right now, if you guys follow the crypto world at all, you can do something very similar, right? You could deposit $20,000 worth of Ethereum, and you can pull out $10,000 worth of a stablecoin like DAI. Okay, well, that's interesting, because now I've deposited Ethereum and I'm getting interest on Ethereum by making this deposit, and I'm borrowing against that at a lower rate. So what's happening is people are depositing crypto, pulling out stablecoins, and repeating the process. So that initial $20,000 deposit they made in Ethereum could end up being something like $60,000, $100,000 worth of stablecoins that they buy other things with, right? They could take that stablecoin, buy Ethereum, deposit it again, and now you get this crazy little leverage ladder structures, which could be very dangerous at some point. It's a new world going on in digital finance and DeFi networks, but I'll keep you posted on how that all pans out. All right. Holy cow, we've got a lot of stuff covered today. So let me go to the negative things. For me, the main big negative factors are going to be the Fed forced to raise rates, which I think they'll fight that one tooth and nail. The inflation numbers, I think, are the biggest challenge for the markets going forward. Other than that, I see a lot of positive stuff. So I'm probably not going to be selling in May and going away this year. I had a couple puts on, but I'm literally like 2 puts on the market, nowhere near what I had in May and June of last year. So what are the questions you guys have for me? There was the Leighton want to know about silver. Let me go at, you want on the futures or you want on, there's been a lot of talk about, let me see if I guess, a silver squeeze coming. I know Brendan is usually here. He loves the future side of things. So let me go to futures, bring up silver futures. You had a nice pop on it today. Crude oil was also an interesting one. I actually have 2 other questions I have to get to since I talked about it earlier in the show. And really this whole show is based off of this question. So Lee, sorry, there's your props. He says, what are your thoughts on selling in May this year? While I like it because the MACD's pointing over and the market's starting to show some weakness, I actually am bearish on the market, but not like overwhelmingly convinced. It's more like I feel like it's just going to traverse sideways with a slight down move in the equity markets, but we'll have to wait and see. So I'm not overly aggressive. Now, let's see. Let's go to our charts here and talk about silver. Now, silver, you can see the breakout we had today. Nice move. I mean, you're up, a great move today, up 3% on silver futures. You do have an area that you're running into right around the 73, 74, right? To me, that would be the main area. I'll go to SLV since that's what most people are trading out the futures. And now we're in it, okay? So it's different when you look at futures contracts. But you're right in that area of supply. It looks like it's getting stronger, but it really has been chopped for a while. I mean, you notice that this doesn't really have any strong sense of direction long term. It's really traversing sideways. The weird wild card here is this initial pump squeeze we had a while back. This goes all the way back into January or February 1st of this year, where there was that little squeeze on silver and it came right back down. Thank you, Reddit traders and people who don't know how the markets work. But all in all, it looks great. I would expect a little hesitation here, but all in all, since April, actually late March, this looks good. I like silver. You could also say the same thing about GLD, although it's got more headwinds above it. You can see we're coming back into more supply levels on gold. So I like silver better, but I think they're both looking pretty good. And of course, when we look at what's going on with the Dixie, right, we are coming right back into some lows here. It'd be interesting over the next couple weeks to keep your eye on that dollar index. That dollar index keeps dropping. Gold and silver to the moon, baby. To much music to Brendan's ears. Now, let me go to this question because I told you I had to go to the couple questions. Why hasn't GameStop sold off more? It's garbage was one question. And then did I take the Philip Morris trade today? Let's start with the Philip Morris trade just because I want you guys to see this one. So we talked about this on Friday's show with the shooting star that it formed. I like it. It was like a double top shooting star. I was cool with it, but then I went this morning and I brought up a 5-minute chart because I normally do not trade New York stocks. I generally shy away from them, and this is why. Look at the gaps on Philip Morris. I noticed the spread was about 4 cents on it when I was looking to make the trade, and you can see that yesterday or today, really weird, choppy. It almost looks like it has no liquidity, which made me nervous. And I said, it's just not worth it. And again, I'd much rather pass on a trade than force myself to get into something that's going to cost me losses. So I did not take the trade today on Philip Morris. That's to answer your question, Ivan. Now, GameStop, GME. Let's go back to our daily here on GameStop, which has really done nothing but traverse sideways for the better part of 3 months now. Why isn't it going lower? Well, I think the main reason that this is not going lower, it's pretty obvious. They've completely redone their financial positions, right? They were probably looking pretty bad with regards to money and loans and things like that. But all of a sudden, things spiked up to $400. Pretty sure that the executive team there is like, hey, unload some, let's pay off some of this debt. I wish I could ask Colin Teddards that one, because Colin is my resident expert in the finance world and economic and fundamentals. But my guess is that GameStop put themselves in a much stronger financial position. I still believe strongly that GameStop is going the way of the dodo, because no one's buying physical games anymore. I mean, it's just not, you're not going to go to the store to buy games. Everything's click, download, done. So it's just a matter of time. I think over time you'll see this thing end up going into bankruptcy unless they can convert into an entertainment hall, would be my guess, and make them like gaming parlors where you're connected to people all around the world with tournaments. Then I think they might have a chance. But selling games, GameStop is toast. It's like Blockbuster, right? There'll be one left in Oregon where you can do an Airbnb on it. Exciting. All right, what else did I have? Oh, I gotta wrap up, guys. I'm going way long here. I did not even plan on going this long. Is it true that ransom was paid with Bitcoin to reopen the gas pipeline? Big red flag for government to do something. Okay, let me just do this right here, and I want to make sure I don't talk so you guys get the sound effects on this one. Oh yeah, everybody wants a donkey. Yeah, this goes back to anybody, in my opinion, that believes that using cryptocurrency is anonymous. These guys are idiots. What do they call Dark Army, Dark Arc? I actually had an article up here, and just let me see if I can pull this one up for you real quick to give you. Here's a company out there, and I will make it full screen for you on this side. If you go to Elliptic, there's a software out there that's tracked all those transactions, right? Pretty much all over the place. So if you look at this article, they've tracked every Bitcoin and where they've gone. So these guys were stupid. They sent it to major exchanges. So as they sent them to exchanges, it's the name of the company is called DarkSide, and apparently they've done this to several other companies. So it's not looking very good for them. What was interesting is their account was frozen, not frozen, but somehow all the assets were seized out of the Bitcoin address that they were using. The speculation right now is that the government got in there, pulled that money out, and they got caught somehow. But they've been sending money to exchanges, which is just like, God, I don't want to say anything because it's not like then you're telling people how to do this stuff, but how freaking dumb can you be if you take stolen money and go through a public exchange where to sign up for those exchanges, you have to show an ID and all your vital information. Yes, it could be fake, but still they sent their Bitcoin there to filter out somewhere else. Hello, there's something called atomic swaps. There's something called cross-chain executions that you can do without people knowing, and then go to an anonymous coin like Zcash or Monero or something that has ring signatures, and you can remain totally anonymous. But I'm not a criminal. Anyway, sorry, I'm going on the soapbox over here. Those are the donkey of the day. These guys that they actually did something, it was intelligent as a way to scam these oil companies and hold them for ransom by freezing up their lines, but they can get caught. You don't do this through Bitcoin. You crazy? Come on, man. Anyway, sorry. Soapbox for the day. Tom says GameStop is pushing to be more e-commerce focused, hired people from Chewy. Even if they got more e-commerce focused, are you going to give me a better price for Call of Duty 75, or can I just go to Amazon and have that delivered tomorrow for less? I mean, if I'm going to go physical, it's Amazon. Yeah, right. Batista says fake hackers. Yeah, just people who had bad idea. And Jerry, you're right. Monero is definitely one of those that you could use, but it's also how you get your coins in there, because there's one aspect you have to figure out how to get them in there without going through an exchange. Because if you put what was it, $15 million, I think was the number. Let me see the exact amount of money. 75 Bitcoin was the payment they got from Colonial Pipeline. If I took 75 Bitcoin and dumped that on a Coinbase, I'm a red flag instantly. And if I try to move that, they're going to be like, we need to verify this and verify that. Same thing with Binance, same thing with Kraken, same thing with Gemini. Anything US-based, you're screwed as far as tracking and accountability. Now, other exchanges around the world might be less strict, might be much more lenient, but still, these guys went about it totally wrong. You don't send it to an exchange and hopefully pull it out in different cryptocurrencies. You use the current technology that's out there and do atomic swaps and things where it doesn't even go to an exchange, right? You could use a MetaMask wallet and just start going into tokens and flipping tokens, so all of a sudden no one knows what the hell's going on, and then go back into Bitcoin. Done. Anyway, sorry. On next week's show, I'll show you how to properly, illegally use cryptocurrencies to extort. Just kidding. Anyway. No. Sorry, Marad. I didn't want to come across that way, but it's like if you do your research and dig a little deep, you understand that there's ways to get around the system. All right, let me go. That was it for today. I want to show you a couple pieces for tomorrow. This is what we've got cooking for economic calendar for tomorrow. 5/18, really, U.S. only has a couple of announcements. You've got building permits and housing starts, both of which are, well, housing starts is expected to drop slightly. Building permits expected to rise. No shock given the fact that we're headed into summer months, so it should be doing really well. Other than that, you've got flash GDP coming out for the euro. They're expecting that to stay the same at a contracting 0.6%. Australia has Westpac consumer sentiment. And then really probably the more important stuff for tomorrow is what's going on with the British pound, GBP. You have consumer price index, PPI, as well as RPI. I like to call it the Magnum PI day for the British pound. Earnings-wise, there was really nothing today, but you do have good stuff tomorrow, guys. Walmart, Home Depot, Macy's, Baidu, and Take-Two Interactive all reporting earnings. Most of those are before market open, so the BMO there on Walmart, that'll be a good one. We'll get a nice idea of how that retail sector is shaping up. Home Depot will be another good one, and don't worry, tomorrow you have Home Depot, but on Wednesday you've got Lowe's, so if you miss the Home Depot pop or whatever happens on that one, you might get the same thing going on with Lowe's on Wednesday. All right. I think that's going to do it. I think I went a little bit long today. Hope you guys enjoyed that one. It's the 17th today. Yeah, I'm going to make sure I got my dates right. So, anyway, hope you enjoyed that. Sell and may go away. Ultimately, it's up to you, but hopefully, you look at things objectively. I know that some people will get in this mindset of like, this market has to go up. It's going to go up. Well, every time you make an assessment, whether it's an investment for your portfolio or over long-term, short-term, doesn't matter, always look at things from the positive side and negative side. And be objective about it. A lot of times we blind ourselves to facts that are right in our face. We go, no, that's not going to impact me. It's not. It might. It might impact you. So when I'm making investment decisions, I usually just on a piece of white paper put a plus on one side and a negative on the other, and I'll run through as many things, and I'll look and say, what are the positive things that's going to help this market continue to accelerate to the upside and just completely squash the sell and may and go away rally? Well, we have a lot of good things. You guys mentioned we have earnings, you've got manufacturing, we've got unemployment, we've got stimulus. Great. And then put myself on the other side and say, I know this market's going down. What are all the things that are going to support my decision and crash this market? Well, we have inflationary numbers. You got rising rate environment. You have that things might have moved too far too fast for bonds, for equities, and for housing. A lot of different factors out there. But ultimately, be objective. Do not pigeonhole yourself in an opinion, because the fastest way to lose all your money is to have a steadfast opinion about something and be wrong. Just admit that you're wrong sometimes and just get out. All right. That's going to do it for me, guys. Tomorrow, we're going to have Josh Lilquist on the program. We're talking Forex tomorrow. He's a Forex trader. Also got his own podcast and show out there, so we'll talk about his show. I was on his a couple times. It was always fun to be on his program. So he'll be my guest tomorrow, talking about currency markets. So if you want to look at the euro, the pound, the yen, the drachma, see if anybody's paying attention out there, live like Greek currency. We'll talk about that on tomorrow's show. You can always email me, the email on the screen, which is TraderMerlin@gmail.com if you have any questions. If you have any good feedback, I'd love to hear that as well. Bad feedback, hey, makes me stronger, so go ahead and send it on in. If you like today's show, give it a thumbs up. And if you're new, do me a favor, click that subscribe button, spread the word. Hopefully we'll get more subscribers for the show and I can have some more fun. All right, that's going to do it for me, everybody. Hope you guys have a fantastic day. Enjoy these market volatile times. I'll see you tomorrow. Take care.